Greeting, fellow stackers. Have you been wondering what is influencing the silver spot price? Well, join me in this episode as I share with you 10 factors that influence the silver prices. Before I get started, some of the material and content for this episode was used from the Scottsdale Bullion and Coin. Shout out to them. Now let's get started. First, we need to understand the pricing trend of silver requires a careful study of a number of different factors. Some of these market dynamics works against each other, making the study of silver price more complex. For example, when the cost of production reaches a certain level, any market price below the cost means less mining and supply. On the other hand, higher silver price supports the more expensive mining and production, increasing supply. I'll briefly summarize below the 10 price factors that serious analysts and educated investors in silver evaluate for making decisions to buy and sell silver. Of course, each of these factors generates extensive research and study, as does their relationships. However, an awareness of these market movers will help you understand more of why the market trends up and down. But remember that while any one factor may gain special attention at any given time, it is important to consider all of them in context to understand both short-term price and the movements in long term. And now, 10 factors that drive the silver price. Number one is supply and demand. The supply and demand equation of silver is one reason the metal is so valuable. Supply is limited, but demand is constant. However, the basic economic fact of the market is that any perceived or actual increase or decrease in supply or demand will move prices, often to the changes itself. For example, if a strike interrupts mining at a major producer, silver prices may spike over the short term. Likewise, announcements of a new use of silver, such as in solar panels, will generate more buying and create an upward price pressure. And number two, silver scrap. At one point, photography consumed massive amount of silver due to its light-sensitive characteristics. As non-silver photography has become a dominant of the field, there is less demand. Likewise, there has been a very large stockpile of photographic film that has been recycled for its silver content. Another way this factor plays out is that increasing prices will cost more existing silver jewelry, coins, and other products to be sold and melted down for addition to the market supply of silver. It is worth nothing that Silver Institute studies show how much of the readily accessible stockpiles of silver and scrap have been exhausted at today's silver prices for the commodity. Number three, technology. As noted with the change in film technology, silver prices are directly and indirectly moved by existing and new technology. Many of these new uses for silver take advantage of physical characteristics found only in this metal, making it virtually irreplaceable. Contradicting that is the fact that new technology is, in fact, helping to replace silver in more mundane applications. For example, new types of aluminum alloys are acceptable replacement for some cheap mirrors. The same goes for the common use of stainless steel, flatware, and many of the household rather than the traditional silver items. Nonetheless, it is a new demand for solar photovoltaic systems and many green applications that generally make technology a net bullish factor for silver demand and prices. At number four, economic trends. In good economic times, people spend a great deal of money on jewelry and items that contain precious metals, such as silver. Likewise, if incomes stagnate or drop, such as purchases are often to the first to be deferred. The level of growth and economic health in emerging market is washed as major indicators of this segment of demand. However, even in rough economic times, there is often demand for luxury products, including watches and fine jewelry. Report on the trend in this area is high-end demand often serve as an indication of overall economic trends, which influences silver prices. At number five, national and global economic trends. Silver, along with gold, is considered to be safe haven investment. This means that silver is seen as retaining its value and purchasing power better than the paper currency and certain other assets when there is economic uncertainty. When and if those economic concerns turn into full crisis, there is generally significant upward pressure in prices for silver and other precious metal. The other side of this issue is that a strong, vibrant economy may decrease the demand for silver from investors and other buyers. While that active economy will generate greater demand for silver in industrial and jewelry applications, it does not pay a dividend or generate interest income. And number six, inflation. Most analysts, economists, and investors understand the insidious nature of inflation on portfolio value. This includes even nominal inflation compounded over a long period of time. Silver, on the other hand, is seen historically as a great hedge against that inflation. Inflation will erode the value of paper currency, and silver can provide protection against such losses in purchasing power. And number seven, strength of the dollar. As the leading global currency, the US dollar generally has an inverse relationship with the price of silver. Silver markets participants have been seeing in history of a strong dollar creating pressure on the price of silver. At the same time, many savvy investors watch for times when the dollar is strong and averages down their holdings by finding bargain prices for their purchases. At number eight, I have gold prices. While the real significance of gold silver ratio is a subject of intense debate, there is a historic relationship between the price of gold and that of silver. In general terms, as the price of gold moves up or down, silver prices will follow. Some specialists trade based on the GSR, buying or selling as silver is expensive or cheap relative to the current price of gold. And at number nine, interest rates. Mentioned briefly above, the level of interest rates is an indication of overall market conditions. Since investment in silver are not made to get current return, some investors will opt for interest payments in the place of a long-term appreciation of silver holdings. Therefore, silver market prices generally have an inverse relationship with the level of interest rates, similar to the strength of the dollar. And finally, number 10, government policies. Due to its long history of use as a medium of exchange, silver market continues to be influenced by the government actions and policies. For example, while gold gets most of the attention as a reserve, central banks around the globe buy and sell silver bullion. National mints, such as the US Mint, consumes a great deal of the world's supply of silver by producing both bullion and numismatic quality coinage. So, what does all this say? Still investing in silver? Along with these factors, it is important for you to understand the difference between speculation and investment, as well as short term and long term investing. The very nature of market is that they react rapidly to short term factors like those cited above. Spectacular and end users, such as jewelry manufacturers, find it important to watch these rapid changes. However, most long term investors are more interested in evaluating the trends that these factors indicate. The key to that long view of investment in silver is to enjoy the protection it offers, pick up bargains when possible, and rest assured that the value of silver holdings will increase substantially in the years to come. And now we know why the silver spot price is continually changing on a minute by minute time. Things like supply and demand, technology, and inflation all are constantly changing and play a big part in the price of silver. If you enjoyed this video, please hit that like button and don't forget to subscribe to my channel and click the bell icon to get notifications when I post new videos. Thank you.